This TFMR podcast is brought to you by your friends at JM Bullion. Visit jmbullion.com for all your gold and silver bullion needs. Welcome back to your TF Metals Report podcast highlights for the week of Monday, November 14th, 2022. A daily podcast is all part of what you get as a subscriber at TFMR. And these little highlights, these little snippets are just a small part of each podcast. They're usually 15 to 20 minutes a day, and these snippets are usually less than a minute. One of those minutes on Monday, November the 14th, was spent discussing COMEX Gold. We'd finished the previous week very strong, but on the backs of a really almost historic short squeeze of the large speculating hedge funds, as they call them. Where would gold next? Where might it find resistance if it could continue on? That was part of the discussion on Monday, November the 14th. Gold on the daily chart. Again, look at all these beautiful green candles in a row. Doesn't show a sign of changing yet. Usually that comes with some kind of engulfing candle over these last three rallies in August and again in early October and early September. We haven't had an engulfing candle yet. Could come though. Could come as soon as tomorrow. We'll watch for that. There's a lot of resistance up here. I mean, there's room for it to run still, 40 more bucks. I drew these lines at 1820, and you can see the 200 days at 1820. So there's room for it to run. The calendar, again, just leads me to think, unless it spikes there tomorrow, probably not going to get there just yet. Silver had been the benefactor of a short squeeze as well. In fact, that was the fourth massive short squeeze of the hedge funds inside of 4 months. This time totaling almost 15% drove price through the 50-day moving average and even through the 200-day moving average. But it was having some trouble holding that position, is due for a pullback, especially if the dollar starts to bounce. All part of what we discussed Tuesday the 15th. Silver dipping back below and closing back below the 200-day moving average. It tried, and that's a pretty engulfing candle, almost fully engulfing, not quite, but pretty close. And if you look back, look at these past several short squeezes. You got the first short squeeze at the end of July, rally, pullback, rallied again, but notice the engulfing candle that led to a drop back to the 50-day moving average early in August, about the 10th or 12th of August. That set off a massive washout to the lows in the 1st of September. Notice in the rally out of that, had a pretty big candle that then dropped, and then the big candle that dropped it back below the 50-day in late September. Notice short squeeze number 3 that began in late September, peaked just only 3 or 4 days later in early October. Look at the engulfing candle that called that to an end. And now look at today's candle. Again, this is why I think silver is going to pull back just looking at this chart. And then you got all the expirations and everything else. Silver could easily pull back, not only to 21, but 20 and a half or even 20. And just simply be following this pattern. Okay? So just be aware that is at least I don't want to say likelihood, but it's at least a possibility. Now, again, all of a sudden geopolitics entered the mix a few hours ago. So that calls some of that into question. But I would sure think we are now back in the pullback phase where silver's got $1, $1.50 to go before it turns higher again, before the BLS. Wednesday the 16th was kind of a boring day in the market, so we had a little fun with the chart. Back in the day, we used to use whiteout to take out obvious bank manipulations. Well, that wasn't the focus on Wednesday, but we thought, what if you removed all the noise around the Ukraine war in March and in April? What would the gold chart look like then? And what would we target going into year end and in 2023 if all that craziness had never taken place? Of course it did, and you can't ignore it. But it's kind of fun to look at things that way, and that's part of what we did Wednesday the 16th. Take a look at this gold chart. Does that look a little unusual to you? Do you remember, if you've been here since the beginning, back when I used to hand draw my charts and all that kind of stuff, sometimes we, look at what was obvious manipulation. And to make the point of why they were trying to manipulate and paint the chart, we just get out the whiteout some of the candles that were made to, influence opinion and influence the trade and manipulate perspective and sentiment. Well, I thought I would take the 20 22 version of that with the gold chart today just for fun. I even redrew in the lines of the grid. Now, why did I do that? Well, gold began the year, like I said, at 1829 is where it closed last year, the last trading day of the year. And so that's kind of our bogey. That's what we want to get back to. That's the red line, sideways line I drew across on this chart. If we can just go green. Now, what if, and why did I white out that big section of chart? That's basically the section of chart for about, a little over 2 months when gold was trading on war fears, and everybody's all freaked out. And eventually the war settled down and it's all been about the Fed ever since. Well, if you took that out, color in your own little candles just between 1900 and 1950 through March and into April. You'd look at this chart and you'd go, damn, if price can keep going here, get back above the 200-day and break above 1850, man, any move back into 1900s would look pretty salty. Now, if I leave all the stuff on there from March where we're up there near 2100, you'd think, well, that ain't no big deal. But if we just take that event off the page, the whole Ukraine war and the reaction, which is what I've attempted to do here, changes the look of it, doesn't it? I don't know, play with that, look at it, study it, see what you think. Over the years, you've probably heard me say if you're going to follow gold, you're going to have to follow just about everything. The macroeconomy, politics, geopolitics, you name it. So as part of our daily discussions at TFMR, we're often looking at other commodities besides just gold and silver. Crude oil and copper are two key commodities in giving us some idea of where maybe the global economy is headed. And on Thursday the 17th, we noticed some interesting things in those charts. And that was part of what we discussed on that day. Let's check copper and crude because these charts don't inspire a lot of short-term confidence. It was just back on Friday. A huge day rally, Thursday and Friday last week from 365 to 395, almost a 10% rally in copper in 2 days last week, giving it all back first 4 days of this week. Remember, 370 is the key level. False breakout maybe above it last week, I don't know. Watch copper closely tomorrow as well, just like we're going to be watching silver in 21. Watch copper in 370, okay? This chart doesn't instill a lot of confidence at this point. If it closes below 370, probably 360, maybe even a pullback near the 50-day before it goes up again. You'll see silver looks a lot like that too, but before we get there, look at crude. This isn't encouraging either. All through October, it looked like it had turned a corner, and as of a couple of weeks ago, as it was pushing toward 95, it looked like, okay, now that kind of looks like a little double top. Maybe it's going to come down here and try to double bottom now, near 77, something like that. Anyway, not very encouraging, especially for the global economy, when you see crude prices like this. Now, again, moving into next year, the U.S. being forced to stop dumping 1 million barrels on the market just simply because they're going to run out if they do. This will turn. But for now, crude back under its 50-day moving average. And looks like it wants to go even lower. Again, copper, crude, you look at the dollar, you look at rates, you can certainly see an environment with expirations pending that makes gold and silver pull back even more than they have today. And as we wrap up the week on Friday, November the 18th, the dollar index rallied a little bit today, and the COMEX metals gave some back, which isn't surprising given the fact that they've had massive short squeeze rallies over the last 2.5 weeks. We're probably in for more of that over the next 7 to 10 market days through the holiday week next week, through option expiration on the COMEX, through contract expiration on the COMEX. And the dollar chart looks like it has bounced and is due to rally a little bit, maybe back up to 108, 109. That'll keep the pressure on the COMEX metals for the next few days, so don't be surprised if there's weakness. Until at least we get to the end of the week after next, as we begin December and get into the next jobs report and some of the other December data. But for now, don't be surprised if the dollar continues to rally over the next, let's call it 5 to 7 market days, and the COMEX metals drift backward after the squeeze that we've had. Have a great weekend. Hopefully you enjoy these podcasts, and please be sure to check out tfmetalsreport.com. A subscription is just $15 a month. Access to the community is worth far more than that. So please check us out, tfmetalsreport.com.